Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the Daily Recap. And today we're going to do something a little bit different with the Daily Recap. We're going to bring in Steve Levay remotely from Philadelphia, city of brotherly love, the home of the NFL's most exciting new offense. Steve, welcome to the Daily Recap.
Thanks, John.
And today what we're going to do is we're going to talk a little bit about some stocks that Steve traded today and some of the types of strategies that he looks to trade in his new Trade the Open mentoring room. And you're probably asking, what's the Trade the Open mentoring room? I've never heard of that one. There's the swing room, there's the active room, there's the momentum room. And basically Mike Lee and Steve Levay had the momentum trading mentoring room, and we've rebranded a little bit to be the Trade the Open room because we thought it was a little bit a better way to describe what they actually do. Steve, you want to tell us a little bit more about why you guys chose to rename your room and some of the changes that are going to be taking place with your room?
Sure. Good afternoon, everybody. And the momentum room that we used to be called didn't really truly define what Mike and I did. Yes, we chased and found momentum stocks, but what we do right now is we gravitate to just trading the open, the first 2 hours where there's good institutional flow, there's not as many algorithms running the stocks, and we find the setups within the first 2 hours that make us the most money because A, it's volatile, and B, because like I said, there's a lot more human touch to the trading. So Trade the Open just means work from 9:30 to 11:30, get up from your desk and do whatever you can afterwards to bide your time. There will be times that we will trade if there's something going on or if there's a lot of volume in the stocks we watch. But most of the time, by 11:30, 12, we're pretty much done 90% of the trading we're going to do for the day.
And one of the things that I know you and Mike talk about a lot with having a Trade the Open strategy, not only can you be most successful potentially just trading those first 2 hours of the day, but it has some lifestyle benefits as well. You have, I know people in your room that have full-time day jobs or choose to do other things about their day, with their day. Speak a little bit to that and some of the feedback you get from people in your room.
Sure. We actually have a guy in our room right now who has a job out in San Francisco, and he does this in the morning, and then he does his daytime, nighttime job afterwards. And it really, he reaps the benefits of being able to trade, like I said, with Mike and I, and when it's volatile, and then he can go and do his job afterwards. Just like Mike Lee, he trades the open, then goes home, and he's hooked on honey and buys and sells clothes all the time.
There you go. And one of the things, we posted an article today from Steve on T3Live.com, him talking a little bit about the Trade the Open room, about his philosophy on trading. And one of the things that Mike and Steve harp on a lot is money management. Because there's a lot of things about human nature that cause, when somebody's down on the day, they look to make all the money back that they lost. And when they're up on the day, they look to make even more and have a bigger day. But money management and fighting that human nature is a big part of, I know, Steve, what you guys talk about in your room. You want to talk a little bit more about that concept and why you think it's helped you achieve longevity and success in this business?
Yeah, I find, like I said, if I'm making money from 9:30 to 11:30, which we call the open, and then I'm stuck at my desk trading all day, I find that I grind my P&L down a lot over trading with commissions or finding a position that may or may not work. I don't have the true definitive feel about it, but I still get into it because I might be bored or there might not be as much action as there is. And I find that when I'm up a certain amount of money, come the end of the day, I've grinded a lot of that P&L away just over trading.
Yeah. So we're going to go over a few stocks now that I know there's a group, the 3D printing stocks, that you and Mike have traded, seems like every day for the past few months, or even more than that, as they've been very much in play there. It's an in vogue sector, 3D printing. People talk about it could be the next big thing. And when you have a high growth company like that that's getting a lot of buzz, it generates a lot of volatility and a lot of beta, which is one of the things that is a prerequisite for your strategy. We can go first, talk about the chart of XONE, X1. There's been some secondary offerings with the 3D printing stocks over the last couple weeks, and that's been a catalyst for some downside action. And today you got some really intensified downside action in XONE. I guess we'll talk about that chart first. I know you were a little bit frustrated today because it was hard to borrow. Sometimes that happens when a stock is ready to go down. They make it hard to borrow. That's just the way the stock market gets you sometimes. But we'll go to the 5-minute chart, and you can talk a little bit about what we saw today. I'll go to the East Coast time zone so we get a better picture of it.
Okay, so as you can see here, first of all, we all knew that the offering price was 62, so I was swinging long for the last 2 days, which is a ton for me. I held a stock for 2 days, go figure, and of course it didn't work. But anyway, so 62 was my out on this trade. It was the offering price, and I was looking for a bounce against that to possibly get back to 66, 68 range. But as you can see here, we got a little bit. I would say you had a quick 5-minute high-low trade right here. If it broke that low, you got about a $1.20 move off the open, and then it bear flagged for the better part of the morning over around that 62.5, 62 level. Once it broke 62, it just went kerplunk. You got a huge move down to 60.5, did a little bit of a bear flag, fell again, another bear flag, and then it fell $4 more. So that's the kind of trade you have to obey your stops, gang. But if you were able to short that, you found the first hour of bear flagging to be a great area to short through. Once that broke, yeah, it extended more than I expected, but knowing that 62 was my level, I was looking, if it did break, I was looking for a move to at least 60. So you got that in basically one bar, and then throughout the morning and the afternoon, it just continuously did not find buyers. So the real true setups here were the 5-minute high-low, and then the bear flag off the open that gave you a really nice monster trade if you were able to short it.
All right, so staying with the 3D printers, Triple D 3D Systems was one that I think you enjoyed a little bit more success with today. And you talk about some of the concepts from the Trade the Open course. We created some new material that outlines some of the strategies that Mike and Steve use on a daily basis in their actual trading in that new Trade the Open course. We talk about Triple D, taking a look at the chart. It encompassed a couple of those strategies this morning. You can talk a little bit more about that, Steve.
Sure. Again, we talk about the 5-minute high-low. Look at this opening bar right here to about 52. Once it cracked that bar, it never violated the 50% line of this bar. It gave you a decent $1.50 move down. And what you see here now is one of my favorite patterns. You got the big move down up until about 10 o'clock. Then you got your rounding top, which shows me an H pattern, which is my favorite pattern. I like to call it the Levay. I don't have the red dog reversal, so I call it the Levay. Here's your H pattern right here. From about 52 to 51, it just hung out there for a little while. Once it broke, gang, look what it did. You got a good quick bar down to about 50.5, bear flagged at around 11:30, and broke again and hit lows pretty much the rest of the day. It never really got back above 51. So right now, these stocks look broken to me, unfortunately. I will continue to trade them because the ranges in these stocks are $2 to $4 every day. And I highly urge, if you can find stocks that can move like that every day, to gravitate to them because they're a lot less volatile than an Apple or a Google. And I feel, in my opinion, I'm a lot safer trading those stocks with a little more size because I know I can control my risk a little better. With Apple, you could tell me it was going $10, and I might still lose money because I'd get torn up in the back and forth action.
Yeah, so an important thing is knowing what types of stocks that you trade best. And one of the things you've written articles about before on T3 Live is the concept, if it ain't broke, don't fix it. You got to ride what's working until it doesn't work anymore. And when you have stocks that are moving, like you talked about in the 3D printing space, there's no reason to go away from them as a day trader if you have a good feel for the way they move. So moving
100% correct.
Yeah, moving on to another stock that you said when we were talking before the show that you focused on today was Kihu. These Chinese names have been in play recently with 2A action. There's been some bullish action in these names. Talk about today what you were looking at in Kihu.
Yeah, if you throw, there it is, 5-minute chart. Well, as you saw, it gapped up to about 92, and then it gave you a $4 basic fall up there, all the way down to 87.5 or something like that. I was looking in here for a bounce. If you look at the first 3 bar down, you started getting a move that looked like it could have been another H pattern. So Mike and I were shorting against $90. We got that original fall down here to about 88.5 or so. But then the stock kind of hung out. I was really looking for a move to new lows. The stock kind of hung out, and then it took off back towards 91 after lunch. At that point, once it broke that bar right about 1 o'clock, 1:15, it broke out of my range. I decided the short wasn't the way to go the rest of the day. But we still capitalized on that early morning move. Again, notice where we capitalized. From 9 o'clock to 11:30, was where the most volatile moves were. And yes, that's where you can also get hurt. We say that all the time. You can get hurt a lot more at 9:30 to 11:30, but the opportunity to make money is much greater then than if you look at the chart from 1 to 4 o'clock. There was really no action in it.
I mean, you just
and
look at volume.
What you see in the market.
Yeah, you see the volume obviously dried up tremendously, and that's
right.
the fuel for stocks, so it makes sense. Another one you looked at today, you talked about SolarCity. And one thing, before we even talk about SolarCity, I want to show you, part of the Trade the Open mentoring room is they're also, Mike and Steve are coming out with a daily watch list, sort of like Scott Redler has the price point sheet he comes out with every morning. Mike and Steve have now created the Trade the Open watch list that they also review in a video in the afternoon, but this is an example of the watch list that they use now. This morning they talked about the 3D printers again. Facebook was listed on there, Lululemon after the gap down on earnings, SolarCity, but just another tool that they've added to their room to make it even better than it was before. But now going on to SolarCity, taking a look at that chart, you can see, here we go, SolarCity. So take it away, Steve.
Okay, SolarCity was a lot sloppier. The stock had a great move on Tuesday. It went up $5 yesterday, kind of just hung out near the top of that bar. Today I was looking right here at about 9 to 10:30. It was bull flagging, yet it couldn't get through that 37 area. So we picked off a short around 35, 36.5, 35, 36.75 with a stop through 37. And we caught this big 3-bar down move right here. That took us to about 35.5. And again, I didn't cover the whole thing down there, but I did make some money in SolarCity looking for that break of, the pennant at that point. The market wasn't too strong. We noticed that it had severe resistance up there around 37. Some might say that's a little of a bullish pattern, but after noticing the 3-bar down move, I was still thinking a little bit on the bearish side. And again, my risk, I was risking 25 cents, and the stock wound up falling $1.50 overall. So, good risk reward there. And again, notice after 11:30, where did the stock really go throughout the day? The stock really didn't go anywhere. You got your big move early on, and then the rest of the day it kind of just hung in that $1.50 range.
Yeah, the great thing about channels and pennants like you saw there in SolarCity is that you don't have to be bearish or bullish. You can be neutral on the stock and just wait for a break either higher or lower out of the pattern. And that's one of the patterns that Mike and Steve, I know you guys talk about a ton in the Trade the Open course, and another really great pattern in terms of skewing risk-reward in your favor, which is what it's all about.
Well, I think that pattern right there, John, the reason it's so good is because you can short right in the middle of the triangle and lose as minimal money as possible. And if it breaks like it did, you're making a lot of money. So you could short right, near the top of that line that you drew there. And if it breaks through the top, you're out. What are you really risking there?
Yep.
And that's the thing. It's just knowing your risk reward and risking small amounts of money to possibly make a decent amount of money.
Yeah, any trader or trading education service that tells you that every trade is going to be a winner, you should run as fast as you can away from that person. All you got to do is skew risk reward in your favor on every trade, and that's how you set yourself up for success. I know Steve would be the first to tell you he's had a couple losing trades in his day, but that doesn't mean that you can't be successful. But just the last thing we're going to talk about, something we were getting ready for this video, and after hours, Elon Musk, the CEO of Tesla. We love Elon Musk over here, incredible guy, incredible innovator. Sort of doesn't really give a crap, excuse my French, what people think. And so he comes out after the close today. A couple weeks ago, he had basically said that the company had done very little to justify its current valuation. And you've had a number of people come out, respected people that have said, trading at $170 a share, there's no scenario really that Tesla justifies that valuation, with very bullish assumptions on sales, on margins, on growth for Tesla. People arrived at valuations like $70 a share. And so Elon Musk took it a step further after the close today and comes out and says it wouldn't be a bad idea to short my stock Tesla at these levels, which is a little bit crazy. On one hand I say, go Elon, you don't care what other people think. You're not about short-term gains, you're about long-term building value, so who cares if your stock goes down? But then I thought about it a little bit, and it sort of erodes confidence in your stock, and it might make institutions a little less inclined to own it. I don't know that it was necessarily the smartest thing he ever did. But we'll take a look at the chart of Tesla here. we'll go the 24-hour time template just to give you a picture of what happened. And what do you
Bounce
know?
back nicely.
People are giving him the benefit of the doubt again. This guy can't do any wrong right now. People love them some Elon Musk. The guy says short my stock. It'll probably squeeze tomorrow. That's the way it goes with Elon.
Would not surprise
and
me.
with Tesla. I mean, basically, another thing, not to go off on a tangent, but his company announced a secondary offering. Tesla's raising some money with a secondary. The stock ticked down in the immediate aftermath of that. Then he comes out and says, you know what, I'm going to buy $100 million in the secondary. I'm actually using the secondary to get more shares myself. So he's an unconventional guy. I love it. Maybe this wasn't the smartest thing in the world, but Wall Street's given him a pass once again, and people want to own Tesla despite the lofty valuation and the out-of-whack sort of price that Tesla's trading at based on fundamentals.
Yep, you're absolutely correct there.
Anyways, that'll do it for today's daily recap. We're excited to give you a little bit of glimpse into the Trade the Open room, give you a little bit of feel for the changes that are being made there and how you could potentially create what we call a second business out of trading. Even if you have a day job and do something else during the day, you can focus on the first hour or two of the session and potentially be successful and live a nice balanced life. So if you want any more information about the room, make sure to contact us, info@T3Live. We also have a webinar next Thursday, a week from today, where Mike and Steve are going to be going even more into depth about the Trade the Open room. And then they'll go into more into depth about a couple strategies that are taught in that room, like the H pattern, like bull and bear flags, about stock picking, how to find the right stocks to trade using the momentum strategy. So should be a great webinar. Steve, thanks for joining me. Hopefully we can do this again. Any last words from you?
No, like you said, we've got the webinar coming up. Hopefully everybody signs up for it. It'll be a very exciting webinar. You'll learn a lot of different things. And for those of you who aren't in our room, give it a try, see if you like it, and you'll definitely see a different side to trading.
All right. Well, this has been John Darsie, your editor-in-chief, with Steve Levay, mentor to the Trade the Open mentoring room. We will see you back here tomorrow morning, Scott and Brittany with the morning call. Or I guess it's just Scott. It's Friday.